I'm Damien from moneytothemasses.com, and I also run one of the UK's biggest money podcasts. And what we've had lots of you from our Facebook group. If you're not a member of the Facebook group, do go and join facebook.com/groups/money to the masses. You've been asking questions about all sorts of things in relation to the current environment and what's going on with the coronavirus and your finances. And the property and mortgage questions, we're getting a lot of them because it impacts a lot of people, particularly with our wealth. And we have a lot of wealth tied up in property and people trying to move houses and trying to remortgage. And so what we thought we'd do is we thought we'd get in somebody who does this all day, every day, really in the thick of it. Because what you see is a lot of headlines, a lot of newspaper reporting that is slightly sensationalist. And we wanted to hear from somebody who had the inside track of what's going on. So we asked Habito, who we've done some videos with previously on mortgages, and we've asked them to come in, join us on this live YouTube chat and discuss your questions, because we've asked you to send in questions, but also just mortgages more widely. So I'll let Will, who's been on a number of our mortgage YouTube videos previously, introduce himself and Habito. So welcome to our Q&A, Will.
Thank you. It's good to be here. So thanks for the intro. So my name's Will. I'm one of the mortgage experts at Habito. So just to give you a little bit of context of who Habito are, we're a online brokerage that is completely free. A lot of people think it's all done by a robot, but you will actually speak to a human expert that will guide you through the whole process. And it's not just the mortgages we can help with. We can also help you with things like solicitors and what surveys to go for. So I hope everyone is staying safe. I really hope you find this useful, and I'm looking forward to answering any questions that you've got.
Yeah, so that's Will and Habito. And so what we're going to do is we're going to, as I say, run through I'm going to ask Will some bits and pieces about what's going on in the mortgage market, and it will answer probably 90% of the questions that we've had come in and the questions that people out there have. And then at the very end, we'll pick up some odd questions that perhaps we haven't covered with the general topic. So if I just kick off then, with a lot of people are obviously worried about their mortgage payments in the current environment. And so what can people do, Will, if they're struggling with mortgage payments?
Sure. So over the last few weeks, what we've seen is a number of lenders that have been announcing that they're offering payment holidays. So a payment holiday is a temporary break or reduction in your mortgage payments, which are typically over 3 months. Now, the government on the 17th of March actually announced that every lender should offer these payment holidays to their customers. And it's usually for people that are up to date with their mortgage payments that can apply for a payment holiday. However, given the circumstances and what is happening, it's always best just to speak to your lender firstly, explain your situation and why you feel that a payment holiday would be suited and why it's needed. And they'll be able to explain, what are the next steps and how to actually get that process.
So on that, I mean, I want to just dig in a little bit deeper on that whole mortgage holiday thing. One of the things we've had in the Facebook group, we've had one or two people start to suggest that they don't really need a mortgage holiday now, but they kind of like the idea of not having to pay their mortgage for 3 months and keeping the money in case they need it in the future. And I suppose that leads on to the idea of really the pros and cons, but also the impact of doing it, because there will be implications of somebody taking a mortgage holiday, regardless of whether they need it or not. So could we just touch upon that?
Of course we can, yeah. So for me, a mortgage is a great way of or means of buying a property, but in reality, no one really wants a mortgage. They actually want the house. And my advice would always be to get rid of the mortgage as soon as you possibly can. So if you're in a position to keep paying your mortgage, then I'd absolutely recommend to keep doing that. If you take a payment holiday, you would still need to pay the money back, and that can be arranged with your lender. So typically what they'll do is they'll extend your mortgage term. So if you took a 3-month payment holiday, then your term would be extended by 3 months. Or what they would say is they'd arrange for your mortgage payments to be ever so slightly higher. So you're paying back that money over the remainder of the mortgage term. But it's important to note that interest is still going to be calculated. I would try and avoid taking a payment holiday if at all possible. But it's a great option to have if you're struggling or you've got concerns about your job or the future. Perhaps there's children on the way, etc. So go for a payment holiday if you absolutely need it. But if you're just concerned, I would suggest speaking to your lender, just explaining why you're concerned. And it might not be a payment holiday is the best thing for you, or they could perhaps look at a temporary reduction in your payments, or perhaps they would say you only pay the interest part of your mortgage repayments, just to ensure that you're at least still paying some of your mortgage off, or at least paying the interest.
So, as you're suggesting, there are other options rather than just taking a complete holiday. But obviously, thinking about the implications of taking a mortgage holiday going forward. So if you take a mortgage holiday now and you had plans in the future that you wanted to remortgage or anything like that, then presumably there's going to be impacts on your ability to do that in the future.
Yeah, and I think it very much depends on the circumstances that sit behind why you're applying for a payment holiday. If we look at a worst case scenario, if you were very unfortunate to lose your job, then when you apply for a remortgage in the future, the lender is going to ask you, what are your current circumstances? And they would assess whether it's suitable to lend you money based on those circumstances. And obviously, if you don't have a job currently, then it's very unlikely you're going to be able to get a mortgage. I think given the what's going on with coronavirus currently, lenders are doing everything they possibly can to try and help people and put them in a good position, if you like. So I would say it's very much based on your circumstances. If it was just a case that you were concerned about what's going to happen and you wanted just to keep the cash flow coming in and have a bit of a buffer, then that wouldn't really affect your chances of applying for a remortgage in the future. Because if you were to apply, you're still employed, you've still got a stream of income coming in. So as long as you meet their sort of affordability guidelines, then there'd be no problem in getting a mortgage. Just one thing I did want to mention, that some lenders, if you took a payment holiday in normal circumstances, they can impact your credit score currently, based on the current circumstances. So it's just something to bear in mind, but always double check with your lender to see any impacts on your credit score.
So just to reiterate that, Will, because I think you broke up slightly, because obviously we are having to record all this with everybody online draining the internet. But basically what you're saying is that in normal circumstances, it could possibly impact your credit rating, but obviously now is the case where the government's intervention, that it shouldn't impact your credit rating. So you just need to make sure it doesn't.
Exactly right. Yeah, always double check with the lender, but no, it shouldn't affect your credit score based on the current circumstances.
I mean, one thing just to quickly touch on there as well. So let's say you took a holiday, would you be required to repay the money, so to make good that period, if you were going to move to another product in the future? So in the short term, say you were going to do it in 4 months' time, would your lender therefore want you to have, the new lender would want you to have obviously made up the holiday break?
Yeah, exactly. So if you were to remortgage, and that's when you would move to another lender, then what would happen just before you remortgage, you would get a redemption statement, and that is how much is outstanding. So therefore, what needs to be paid off by the new lender. So yes, that would still need to be cleared. However, you could look when you approach the new lender to get sufficient funds, so borrow enough money to cover the outstanding mortgage and any money that has accumulated as a consequence of the payment holiday. If you were going to do what's called a product transfer, which is just getting a new rate, so whether that's a fixed rate or a variable rate with your existing lender, then the terms pretty much stay the same. So the outstanding amount is still the same, but it's just to put you onto a new rate, whether that be a fixed or a variable rate.
Okay. One of the things, we'll come back to later about what's going on generally with the mortgage market in terms of the availability of mortgages, because we obviously seen lots of headlines about mortgages sort of almost seemingly to dry up, that lenders are starting to pull products. We'll come back to that. I think that's an important point later. But while we're talking about people with existing mortgages, obviously the Bank of England made 2 emergency rate cuts in the last month. And so for a lot of people, they're wondering what the impact is for them. So if we focus on those with existing mortgage products, now. What is the impact for them going forward?
Okay, well, I mean, firstly, to give you context on what happened. So the base rate was at 0.75 and it was reduced to 0.25, and that was on the 11th of March. And then, as you said, there was a second base rate cut, which was on the 19th, which went from 0.25 to 0.1%. Now, usually this is the Bank of England base rate is a means where banks can borrow money. So a lot of people are thinking that will have a direct impact on their mortgage, which I'll come to shortly. But banks don't always borrow money from the Bank of England. They borrow money elsewhere. So the impact from a reduction in the base rate doesn't always necessarily have a direct impact on your rate and what you're paying. So if you've got a fixed rate currently, then that will remain exactly the same. It's a fixed rate of interest, and it's usually for 2, 3, or 5 years. So any changes in the base rate won't affect that whatsoever. If you're off the fixed rate, so you've come to the end of that deal and you're now on what's called the standard variable rate, again, it doesn't necessarily mean that your rate would be affected. We've started to see a few lenders, so the Mortgage Works being one of them, Virgin, I believe, as well, have reduced their standard variable rate. But not all lenders have reduced their standard variable rate as a consequence of the base rate cut. Now, if you're on a base rate tracker, and as the name suggests, it tracks the Bank of England base rate, and it's typically a certain percentage above the base rate, then you will see a reduction in your payment. It's usually 1 month after the base rate has been cut. However, it's always best just double checking with your lender. And what they would do is they would send you out some form of letter or notification, whether that be an email, just to confirm what your new monthly payments will be.
I remember, I have to laugh at this, that when the Bank of England raised interest rates not long ago, because you remember after Brexit, they did an emergency cut and they nudged them back up again. I think my lender was skipping and clicking their heels, because within it felt like an hour of that happening, I got a text message from them saying, we'll let you know what's going to happen when now the rate's gone up. And of course, we've had 2 emergency cuts this time, and I barely heard anything from them. It eventually comes via letter, but it almost feels like it's a begrudging, because it's obviously pulling down the rate, because I'm on a tracker. So it just makes me laugh that when the rate comes down, that lenders aren't necessarily so keen to pass these things on or tell you. I know they've got to, but it does make me smile. While we're on the talking about mortgage lenders, we might as well deviate onto that, about the mortgage market more widely, about what are you seeing in the mortgage market? Because obviously I've seen headlines saying that firms are pulling their loan to values down, so they're only offering mortgages to people perhaps who've got the largest amount of equity in their house. So it's causing people to think that the mortgage market is almost broken or stopped. So what are you seeing from your end?
I mean, you're absolutely right. Lenders, they have started to withdraw some products. So I think it's probably best I give you a little bit of context about what has happened and why. So, as with many businesses and industries, coronavirus has required people to work remotely, and it's no different for lenders, and they deal with a hell of a lot of applications on a day-to-day basis. So logistically, for them to move all of their workforce to work from home, that has kind of drained their resources and meant that they can't deal with as many inquiries. The other thing to mention is, going back to what we said about payment holidays, they have understandably been inundated with calls about payment holidays, and rightly so. They want to serve their existing customers and not have huge wait times for the customers to apply for these payment holidays. Another thing to mention is that the mortgage market is highly competitive, and what you see is if you've got a lender that has got very good products and they would withdraw those products, then it means the next lender down the list, which is offering competitive mortgages, get all those mortgage applications, and it puts a lot of sort of focus on them to try and service those, so their service levels will go up. And it's had this domino effect on one lender withdrew products, and then a number of other lenders kind of followed suit. That partnered with, which I know we'll come on to later, surveyors not being able to do physical valuations, and a lot of solicitors not being able to work as they usually would. meant, can we actually process these mortgages in the right way? So to add a little bit more meat to the bone, higher loan to value products, so they are products with a smaller deposit, so 5%, 10%, 15%. We've seen a lot of those have been removed from the market for now. And it seems that lenders, they're still open for business, and they still can help you with mortgages, but it tends to be, and this is from the lender's perspective, lower risk mortgages. So that's usually those mortgages with a 40% deposit or 40% in equity or higher, because they can do what's called an AVM. So that's an automated valuation or a desktop valuation that's done via a computer. So they can underwrite the case and they can do the valuation all from, you know, their home if they like. So yes, we have seen some products withdrawn. It doesn't mean that it's complete lockdown and lenders aren't lending whatsoever. And what we're actually starting to see is a couple of those lenders that remove their rates early on have now found their feet, and they're starting to slowly reintroduce certain products. But yeah, there's no denying it that there are less products out there than there were 3 weeks ago.
So obviously that's for people who are looking to buy properties, or in particular they want to move. One of the things that I see a lot of people speculate is this are the lenders basically pricing in a house price crash? And I know we don't want to get into it's a kind of how long's a piece of string question about house prices, but it is obviously relevant to what we're talking about. And so is your view, or how much do you think of what's going on in the mortgage market is related to actually them worrying about risk and price drops, or, like you mentioned previously, down to just almost service levels that they're able to maintain?
It's really difficult to say, is my honest answer. And I would say that anyone that says they know what's going to happen with house prices, it's probably telling a little bit of a porky, because it's completely unknown as to what's going to happen. Perhaps it would be naive to think that lenders wouldn't factor that in, but personally, I strongly feel that lenders are doing what they possibly can to look after their existing customers, try and maintain service levels, and as much as possible, try and keep to business as usual. So yes, that may be a factor, but I certainly think, and this is what I've read in a number of different places, that we don't know the impact on house prices. We don't know whether they'll fall, go up. So possibly, but I wouldn't say that's the sole reason there.
Okay, because I mean, just to sort of back up what Will's saying, I mean, I've read so many things where people are starting to speculate that what's going to happen to house prices, and the problem you have with that is if you have no transactions really, or very limited data for transactions of houses for a period of time, it means it's very difficult to work out what the value of a house is. So we're not going to really know until we get out this period what's going to happen to them. So I know that's not very helpful for people, but it's a very it is an unprecedented time where we've had people unable to go and view houses, and estate agents having to close their doors or limit what they can do. But on that, I think that leads quite nicely into about people who are looking to buy and sell properties. So, I mean, I don't know how you want to tackle this, Will. It's up to you whether you want to do it on about the different stages of where people are in the process. But I mean, if people are looking to buy and sell a home, should they?
Yeah, I think you're right. I think it's worth tackling it in terms of what stage they are currently at. So it is still very much possible to buy and sell property, but things will be a lot slower. As you just alluded to there, that solicitors aren't able to work in the same ways that they have done previously. A number of estate agents have had to their door. But if you've got a transaction that's going through currently, then what I would firstly suggest is engage with the vendor, so the person you're buying the property from, and just see if you can amicably agree a later stage for when you're looking to exchange and complete. I think there needs to be awareness, which there is, that things will take a hell of a lot longer, and try and delay things so people can maintain sort of social distancing and try and get past the storm, so to speak, before they actually move into the property. So it's still possible, but it would take longer. If you are just starting the actual process and you're thinking about putting your property on the market, or you're thinking to buy a property, Again, it is still possible. It's going to take a lot longer, and it's probably not advisable to do that now. And it's probably best to weather this storm and then start to look to put your property on the market or look for properties.
One of the things that obviously there'll be people who've had mortgage offers just before this has come along, and they won't necessarily have a property or actually got further down the line or whatever, a part of the process, but they've got a mortgage offer. What's the general view of what's happening with mortgage offers from lenders? Are they extending them? Are they pulling them?
Yeah, so if you've got a mortgage offer already, that won't change. So that's still sort of confirmation from the lender that they're ready to go when you need them, when you want to complete on the transaction. A lot of lenders are allowing extensions on mortgage offers, typically for 3 months. And that links into what I was saying before. If you can agree a later exchange completion date with the person you're buying from, speak to your lender, explain the situation, and then what they will be able to do or should be able to do is give you an extension of up to 3 months just to enable you to do that.
Okay. I mean, we've talked a lot about residential mortgages. I mean, it would be quite good just to touch upon landlords, obviously, because there are a number of landlords within our communities who have been talking about or worried about what's going on with the mortgage market. So, what does all this mean for landlords?
So it's very similar, the guidance and how lenders are approaching this. So often, if you've got a buy-to-let mortgage, then that mortgage is in effect paid via the rent that's coming in. And we've got to bear in mind that it's not people applying for mortgages, it's people in rented that may be affected by coronavirus as well. And if they can't pay the rent, then obviously that landlord may struggle to pay their mortgages as well. So similar to those with a residential mortgage, they can apply for a payment holiday, and they can freeze or reduce their payments for up to 3 months as well. So the guidance is very, very similar. I think it's worth sort of pointing out that the government have released a pack or guidance for landlords and tenants, which you can find from their website. And it's a very big document. It's not the most exciting of reads, but it's got loads and loads of points that I would recommend you read, which tells you everything you need to know about what guidance is out there for landlords and also for tenants.
Okay, so what I think is good now is if we start to touch upon some of the questions that we've perhaps not covered in detail in our general discussion. So I'm going to start running through some of those. There'll be bits that we have touched upon. Yeah. And I mean, one of the ones I've got here is that somebody's saying that they're not working and expect it will take a while in this climate to get a new job. In the meantime, they're hitting the end of their 5-year fixed term mortgage. And their questions are, one, will they struggle to remortgage with another provider? And two, what options will they have with their current provider at the moment to take advantage of low rates?
Yeah, sure. So if you're not currently working, I mean, firstly, I'm sorry to hear that, but it will be very difficult, to be very blunt, to get a mortgage with another lender. When lenders assess affordability, they have to assess it based over the whole mortgage term, which is typically 20, 25 years, for example. So it will be a challenge to get a mortgage with a new lender. What you can do though, you can, and Habito, we can help you with this as well, and we can explain all the options you've got based on your current circumstances. But you can approach your existing lender and look at a product transfer. So that is essentially them just giving you the same, staying with the same lender, but giving you an option of a new deal. So you therefore won't then revert onto the standard variable rate.
Okay. Next question I've got here is, I mean, they're jumping around topics slightly, but I think that's fine. I mean, one of them is, if somebody takes a mortgage holiday, will it impact their ability to equity release on the property? And if so, for how long?
So it goes back to what I was saying before, and it very much depends on the circumstances that sit around why you took the payment holiday in the first place. If it was just you wanted a temporary reduction and you're still employed, but you needed to increase cash flow, then it won't really affect you whatsoever. If, however, the reason why you took the payment holiday was because you've lost a job, for example, then it would be a bit more difficult, because a lender probably wouldn't lend you any more money if you're not currently working. So it depends on the circumstance. And again, there could be a number of different reasons why you requested a payment holiday. So you can get in contact and you can talk what your potential options are. There's no sort of defined time limit. It would take 3 months or 6 months before you can apply. It's very much based on circumstances.
Okay. I mean, the next question I've got is, I'm going to paraphrase it slightly, but it's to do with deposit. So somebody is looking to buy a property. Now they've got around about 36% of deposit on the sort of house that they want to buy. But obviously at the moment, they're not planning on buying for 3 more years. And it's also that's down to personal circumstances. And the question was relating to, at what point does saving or giving more to a lender result in diminishing returns in terms of the mortgage deal? So should they be saving even more for a deposit, or is it not worth going over 30, 40, 50% loan to value? So they're trying to understand the way the lenders work in terms of the sort of bracketing or what the offers they get, because obviously the bigger the deposit, generally the better offer you get.
Yeah, you're absolutely spot on. So I'll walk through the loan to value brackets. And loan to value is the loan you're requesting to the value of the property. So typically, if you've got a 40% deposit, so that means 60% loan to value, that will unlock the best rates that are out there. Anything lower than anything lower than 60% loan to value doesn't really change the rates a huge amount. So and those kind of parameters are 60% loan to value, 75% loan to value, 80, 85, 90, and 95. So they're usually in sort of multiples of 5. So if you've got a 40% deposit, I mean, that's fantastic. Well done for saving that sort of money. But that would be my suggestion. Try and get up to 40%, because that will give you the best possible rates that are out there.
Okay, this one is not on the. It's a similar kind of theme, but it's about somebody who has a fairly they've got a high value property which they own outright, and will they still be able to take a substantial loan against it to pay for divorce settlement? So they're trying to obviously get as much money as they can. How will the current situation affect my ability to get a loan and its conditions? So, I mean, what's the answer to that particular question?
Yeah, it's very much possible. Lenders are open for remortgages. If it's a high value property, it depends on how much you're looking to borrow. But if you're staying below that sort of 60% loan to value mark, that would probably mean that a lender would be able to do an automated valuation. Therefore, that wouldn't hold anything up, because a surveyor doesn't physically have to go out to the property. So the short answer is yes, that's still very much possible, and yeah, we can certainly help you with that.
This next question is quite an interesting one because of the age of the person. Their product is coming to an end in June, but the term ends next year. They're 63 years old, and their bank will not give them another product. What can they do?
Okay, so you've got other options out there. So most lenders will cap the maximum term at age 70, but some will go to age 75, some will go to age 80 and beyond. So we could look at a lender that would enable you to go up to age 80, for example, and that would mean that you could get a 16-year term. So you could have effectively a new mortgage. So yes, it is still possible, and it depends on their current setup. So are they currently working at the moment? Are they currently retired? Are they looking to retire in the short term? Because these are all things and factors that the lender will ask. But yeah, it's very much possible. And what I would suggest in that scenario, particularly if they're on the standard variable coming close to it, is to look at your options now, so you can get something set up. So you don't come to the end of your mortgage term without having something set up ready to go. Okay.
One of the other questions we've got, which is, you're not going to be able to give a definitive answer in a way, but an opinion would be, people would value that. They're a first-time buyer, and they said, will it be a good time to buy a house when this is over, or will it be best to wait until things recover? Will the mortgages, loan to values increase again? I think what they're getting at here is it better, obviously, wait until the market and everything is back to almost where it was before this crisis and the deals that are out there? Do you think it's going to get back to that point, is effectively what they're asking there?
Yes, I do. I'm confident that we will get back to that point. I kind of mentioned earlier that we're starting to see lenders drip feed some products back into the market. So yes, I think we will get back to where we were quite when that will be is very hard to determine currently. And to go back to, if you're looking to buy a property now, you can still do it, but it will take longer. So just factor that in. And another thing to bear in mind is that if you're a first-time buyer, you're going to be at the start of the chain, they call it. So you're not selling a property. If you are involved with a very long chain, and that means that you are buying off someone that's then buying off someone, and so on and so forth, the more people that are in this chain, the more chances there are of things potentially going wrong. So I suppose my advice would be, have a look at the chain itself, decide whether you can wait, decide whether it's absolutely essential you move now. And with response to the question about rates coming back, absolutely, I'm very confident they will come back. Just I don't know when.
One of the questions I want to touch upon that's been sent in actually on the live chat feed, and you can answer this one. We can do a bit more generally. The person said that they're paying their mortgage back as interest only at the moment, and they want to go back onto repayment. Their husband's self-employed, and while they're employed, what would you advise? I mean, one thing that would be quite useful to touch upon as well on that is just what the kind of rules for self-employed people when it comes to mortgages. It seems to be whenever we have discussions in the Facebook group and that about mortgages and self-employed people seems to be almost a minefield. What do they need? What sort of evidence? I mean, I know there's no one size probably fits all with every lender, but what's the general advice from you?
Okay, so most lenders, they will require 2 years tax returns, and that's whether you are a sole trader, you have a partnership, or it's a limited company. They will ask for tax calculations, or they're sometimes referred to as SA 302s, alongside the tax year overviews, which confirm what taxes has been paid. There are some lenders that will accept just 1 year's worth of accounts. So if you've got 1 year's, don't think you can't get a mortgage. But yeah, to open up the door to most lenders, you'd need a minimum of 2 years. But the requirements in terms of deposit are exactly the same if you're employed. You can get a mortgage with a 5% deposit, but obviously the bigger the deposit, the better. But yeah, if you wanted to discuss that in more detail, obviously I'd be happy to elaborate on individual circumstances. Okay.
So I mean, I think we've covered most of the questions that we had that were sent in, and we've gone through some of the other more general pieces. I mean, one of the ones I just wanted to touch upon, well, two things really. I mean, life insurance and mortgages, in my view, do go hand in hand. And it's one of the things that I think is worth mentioning on this, because I think a lot of people inherently will obviously want to start to cut their bills, and they might start to look at cutting back on insurance, life insurances, which obviously you've got to bear in mind. If you die, who's going to pay for, or how would your partner, for example, pay for the house? And so having life insurance is important, and we've done a whole piece on Money to the Masses about this. But I mean, what's your advice on life insurance generally in this environment, and about whether you can get it? Because I know there's a lot of people worried about, will life insurance cover coronavirus, for example?
Yeah, sure. So what I'll do is I'll answer that question, and then I'll go back to the previous question, because I just remembered I didn't actually answer the question about going from interest only to capital and interest. So
I'll tell you what, Will, go back to the previous question, and then others will probably forget. So yeah, go back to the previous one, and we'll touch on the life insurance in a second.
Fine. Okay. So as part of the question, you mentioned uncertainty. So if you are uncertain with what's going to happen at the moment, and that's perfectly understandable, a suggestion may be that rather than going over to capital and interest repayment now, a lot of lenders will allow you to overpay, and it's usually up to 10% of the outstanding balance per year. So rather than switching over to capital and interest repayment, it might be worth just overpaying as much as you possibly can, and that will reduce the amount of capital, or the amount of mortgage that is actually outstanding. So in the short term, overpay as much as you can, and if you can't make that payment, then you can also always just pay the interest only. If you did want to switch fully over to capital and interest, then most lenders are more than happy to do that, because it's actually beneficial, because obviously the mortgage is going to be paid off. There's usually a bit of an admin charge, depends on who your lender is to what that will be, but most lenders are more than happy to switch that over from interest only to capital and interest. So yeah, give your lender a call, and they'll be able to talk you through exactly what you need to do to get that switched over.
So I mentioned I will just ask you quickly, what's your sort of feedback you're hearing about the lenders and the time that people are spending on the phones? Because I get odd anecdotal pieces of information from different people, and I'm reading saying they're stuck online on the phones for hours, not getting through. I mean, what's the sort of view from within the industry? Is that getting better?
Yes, and it's absolutely right. I mean, I've heard similar stories and experienced it myself, calling the lenders. So the wait times are extremely long at the moment. That was to be expected because a lot of people were sort of inundating the lenders for payment holidays, which is absolutely fine. We're starting to see that reduce and wait times come down, and a number of lenders have actually put an option on their website to be able to apply for a mortgage holiday online. So if you've got an account with your mortgage lender, so an online account where you can check the balance, check that firstly to see whether it's an option to apply for a payment holiday online before giving the lender a call. And one thing it's worth suggesting is that try and get in contact with the lender before your payment comes out. But if it's, let's say, I don't know, 25 days before your next payment comes out, then it's not as urgent as someone that's got a payment coming out in the next couple of days. So all I would say is whilst these lenders are going through this unprecedented times, it's worth just sparing a thought for those that are desperately in need to get a payment holiday that might have their next payment coming out within the next couple of days. So just consider that would be my ask before you call the lender, just to help them manage the queue times.
Okay, so if we jump onto the life insurance question that I was asking about, life insurance relating to this period with coronavirus, what's your view?
Yep. So, I mean, Habito offer life insurance. There's plenty of other providers out there, and they are still offering life insurance. So, coronavirus is covered as part of that. There are certain conditions, as there are with any life insurers, but it's paid upon. There'll be a payout depending on when someone were to die, and it's a horrible thing to talk about. But yes, it still will cover you, whether it's linked to coronavirus or something else.
Okay. I mean, one of the last questions I think we'll do before we wrap this up, because people can always send in more questions, and we can always do this again, and we can always, because this is going to be evolving over time. Things are going to keep changing, and the market's going to be moving, and all sorts of things. We did touch upon remortgages, but we might as well ask this last question because I think it just summarises things quite neatly. About are remortgages more challenging at the moment? So less than 60% loan to value. The general view is yes.
I would say less than 60% loan to value. They're not. They will take longer for sure. Reasons I've mentioned before. But I would say because they are lower risk from the lender's point of view, because there's a lot of equity within the property, they can still do a lot of things digitally, like the valuations that I spoke about. So they're taking longer, but I wouldn't say they're particularly challenging. Anything above 60% loan to value may require a physical valuation, and that would extend the amount of time before a lender can send out a mortgage offer, just because they need to go and ensure that the property is a suitable security to lend money against. And they're looking for things like, has it got 4 walls? Has it got a roof? Has it got holes in it? Basic stuff. But they need to satisfy their own requirements that it's a suitable security before they release a mortgage offer. So to summarise, less than 60%, not really an issue. It will take longer. Above that, you might encounter some issues, and it would be more challenging.
So I mean, I think that's quite a good way to finish on. One of the things I wanted to do with this Q&A is to give a realistic picture of where the market is and what help is out there for people and the options, because there are options. I mean, the message that's coming through from this, there are options, but you do need to talk to your lender. And in particular, I do think, I've always been a big advocate of independent mortgage advice, because most people do. I think it's around 70% of people do seek independent mortgage advice, but it's because there's a range of products. Different lenders have different criteria. So you need somebody who knows the market, who could find more. Basically, there's multiple solutions out there, and they may be able to point you in the right direction. So, it doesn't have to be Habito. As long as it's somebody who can search the market. I know Habito does that very well. So I think that will bring it to the end. So thank you, Will, for all your time on this. Someone's actually asked, can we still call Habito for other questions?
Absolutely. I did want to mention that if you've got any concerns or you're worried about anything, we're here to give advice as well, and it's completely free. So if you've got any questions, then please feel free to get in contact. You don't necessarily need to be looking for a mortgage right now. If you just want to find out, what's going to happen, or what's currently happening, or if I bought in 6, 12 months, then yeah, we can absolutely help you. And just to add to that, there's plenty of support out there. Money advice service, Money to the Masses have got some great stuff as well. So there is plenty of support out there.
Fantastic. So thank you, Will, for your time on this. We'll, like I say, we may do this again. So for those of you who are watching this video, if there's anything else that you would like to have questions on, it doesn't have to be mortgages. We may do this on to do with business stuff, accountancy, or whatever it is. Then do join the Facebook group, facebook.com/groups/Money to the Masses. There's a whole community there that are helping each other, answering questions. I'm in there all the time, so you can talk to me in there. And don't forget to listen to the podcast that we bring out every week on Sundays, Wednesdays and Sundays. And of course, visit moneytothemasses.com and check out all our social channels.